Hello, everyone. I welcome you again to another weekly edition of Stock Market Mutterings. This is for the week ending on April 1st, an April Fool's Day, but I promise I will not make you a fool. Again, you don't have my grizzled mug down in the far corner. I'm traveling again this week. Really difficult for me to do that editing, but that doesn't matter because I'm going to be dishing out some solid stuff. Now, where we left off last week when we were talking about the market, and really for the last couple weeks, it's been all about that 50 moving average. If you guys look down here at my bottom chart, this red line represents the 50 simple moving average on a daily chart. We've been talking about that for weeks. The market's been in and out of that, basket weaving right through it, and we really cracked that last week. And I was saying early, there was some good stuff that I said last week and some stuff that really didn't play out so well. I thought the value was going to come to the upside in a quick bounce, and there were just two out of the 50-50, one red day, one green day, one red day, one green day, because we only had 4 days of trading last week. But I kind of expected a little bit more. I have to say I was a little bit wrong on that one. And what it's all about now, obviously, it's all about the 200 now. If we go back to February when this whole thing started, or when it really kind of capitulated for the short term, you had this linear market starts dumping out pretty heavily through February, and you just kind of flush immediately right into this 200. And you can see a lot of buying came in there, and we got a rally that took us back to the 50, spanned for a couple of weeks, and as we've been saying, going through the 50 moving average, and then finally you got back down there. Almost every single day of this week that we traded, almost every single day, this thing got very close to its 200 moving average. It got there on Monday, got kind of close on Tuesday, went back down there on Wednesday, kind of was flirting with it a little bit, or feeling like it wanted to get back down there on Thursday, and that's where it stayed. So going forward, this is the line in the sand right now. I'm feeling, the way I'm looking at it, which could be completely wrong, but part of trading and understanding trading is feel, is just common sense besides technical indicators. And what's really standing out to me right now is you've had about 4 shots down here at this 200 moving average, but no real rally attempt has taken place. Yes, you had a couple green days, but they didn't feel like green days. And I have to think right here, memory serves me right, Thursday, this would be Wednesday. This day here was green by a couple of 100 points, but the big FANG names, which we'll talk about in a second, they got hit. They just kept going down and down, especially Tesla, Nvidia, a couple of those names. And you just felt that even though the market was up a couple of 100 points, it wanted red, and that's where it ended up. And I mean, it made a massive shift going from green, red, and then finish up a couple 100 points. So you're still going to see these wild ranges. Let's first talk about this 50 moving average. I mean, not the 50, excuse me, the 200 moving average. This is the line in the sand. If you can get some authoritative bounce off of this, and it can hold, which stands right now on the SPYs about 258.5. If you can hold that, there's a possibility we start working our way back to 270 and 272 for the short term, which is the 50 moving average. You might see that. If you don't, which seems to me, just by feel alone, I could be completely wrong, and I'm not embarrassed to admit that, but if we lose this 200 moving average, I don't see anything in the way of stopping you from retesting February 9th lows, which is 250, 290. Let's just say 253 area. We're going to go down there. If we lose this moving average, you start to see more selling early on. We're going here. This will be the next stop. There really isn't anything to stop it. So how do you play that? If you're looking at, if you have strength early on, dips get bought up, rallies hold, look for maybe a 270 run throughout the week. I mean, it won't happen probably in one day, but maybe a little run up to 270, 265. If we lose this 200 moving average, you really got to look at February 9th's low down there at 253. Most likely, that's where we're going to end up. Now, this puts us in two kinds of positions for stocks that we're looking at. If we rally, we're looking at stocks that possibly we would like to long. If we're going to continue to fade like this, there's stocks that you're probably going to want to short, because many of these charts look the same. They were at all-time highs, and they buried down to some deep moving averages, and they got a bounce on Thursday. That's about what you're going to see in every one. Now, one of the stocks that hasn't quite gotten when you compare it to its peers and the amount of retracements that they've had, is Netflix. I mean, it's still relatively solid. Yes, it has pulled back significantly, but compared to something, as far as something like an Apple or Facebook, definitely, it's not quite as much. You're down here on the 50 moving average. You slightly went through that. Now, if the only way I'm interested in this is on kind of short-term scalping. This is a scalper's market. I'm day trading here. I'm not investing. It's not investment recommendations. It's just day trading, which can change from 1 minute you're bullish, next minute you're bearish, and back and forth throughout the day. But if we're strong, I'd look for intraday setups. This thing probably would get back to 307. There should be a handful of great trades there coming through support, coming through consolidation, resistances, building solid patterns and setting up. You really have to pay attention to your setups, because if you're not patient and you try to get in early, you're going to get hit. We've talked about buying the dip before. That was pretty smooth strategy for a couple of years, because you could just go into the dip. If it pulled back a little bit more, you would add. Most stocks just kind of nestled down at about -1 to -2, and then they'd bounce back. There was not a whole lot of risk there. Well, now you're seeing stuff like Nvidia just jam down 20 points, or Tesla 20 points. So you can't just buy dips randomly. You've got to wait for these setups. Now, if we start to sell off, I don't think this is one of the better shorts you can have. I think something like a Tesla would be a lot better, which we'll talk about in just a second. But I do kind of like Netflix if we continue strong, at least to back just for a touch over 300. So kind of watch a little bit of Netflix. I also want to look at Lulu here. I like the way this chart sets up for a short-term short position. I will say, just full disclosure, every time I start nibbling in retail just blows for me, especially when it comes to shorting. You've seen stuff that just, wow, this market's been going down, like Dick's Sporting Goods, this Lulu, Guess, GES. This crap just keeps going up. It's like, I don't know what, people's falling in love with brick and mortar here, but I'm kind of looking for maybe Lulu to pull a number like this. Maybe it gets vertical early on Monday, and you can kind of get your parabolic standard set up. I don't have any levels I can give you right here. I'm just kind of throwing this one out. Maybe if you look at, let's say, 92, somewhere in that area, you get a good $2 to $3 bounce early on Monday. That's probably not going to be a high probability scenario, but it's in the back of my mind if in case it does. Maybe put a little bit of short in there. Market pressure should weaken this down back to 85. So I'd like to maybe look at a short there again. A tough one here that may be difficult to set up. MU's also another one here. This is a big old Momo stock. It's kind of curling here, but it's still a little bit of distance away from its VWAP. This was another one that just had a monster run. It goes from 42 to 60. It's given about half of that back. So again, if you see, you got to have some market help, or some of these, I would even say short-term market help. The market doesn't have to run all day long, but you can have short bursts of rallies. One thing I do want to mention is I would not, under any circumstance, trust any rally until they can continue to sustain it. We have not seen that. We've not seen back-to-back green days, seems like in a while. We get 200 to 300 point upswings, and then you start seeing violent downswings. So everything is super, super short term right here. But maybe MU, you get a little bit of a bounce on this one. This was something I would also look for a short. If you get underneath of $50, you start seeing more selling, more pressure, more washing out to February's lows. This thing probably tags its 50 moving average, which is $48, somewhere in the 40s. I would definitely look at this one too as both a long and short. Also, if maybe possibility, again, being strong here, I'd like to look at Faye. This has been a pretty solid stock. It's held up well through most of this market madness. Not too much of a pullback. 17 down here to the lower 16s. It's holding its 50 moving average pretty good here over the last 3 days. Again, the theme that I keep talking about here is if we're looking for setups and we're looking for very short term. If I say bullish, I'm talking about maybe for an hour at best, and then you might want to you just got to take your gains in this market if you get them, because you're not sure yet. Now things could change. These analysis could change at any minute depending on how the market operates, but I don't think we're going to see too much of a change in the market internals. So this one should trade back up to 1750, again, air quotes. If the market is strong for a day or two, you could get a nice bounce. This is not something I would look at shorting. I think there's other shorts better out there. Like I said, MU is a pretty good one. And speaking of that, I think you're if you've got the stomach for it right now, Tesla would probably be your your best short here on certain rips. I mean, this thing has mad range, and again, this is not for everyone here. I mean, you've got silly ranges. I mean, just take a look at Thursday's action. You're opening at 258. You're just slaughtering people to 248. So you just tear them right in half for $10 at the open. Just murdering people after you've already dropped pretty much nonstop from 306. You know, you're just taking people out. You base. Then look at this. You get this, I mean, hardcore bounce. And a lot of this was market related. The market finally picked a point. It wanted to start rallying. You go from 250 to 270, $20. And you saw stuff like that with Netflix. You saw a monster bounce on that. You saw something like that on Nvidia. These big beta names just got monster range. Here's another one. 221s to 234s. I mean, this is what we're talking about. You've got spots in here where that's set up nice, like something like this right here, where you got some good risk to reward, getting a breakout with a really tight stop. But what's good about these is when you nail one, you get a monstrous range out of them. So that's kind of what we're looking at is, you know, everything is just hour by hour, maybe even less. So back to Tesla, I think if you start getting, if this does not hold and you start going back down here to 248, it's going to get really ugly. I know it's really oversold on a lot of time frames. It's a cult stock. You got half of the world that hates this thing and wants to put Musk in like a body bag and do a full-on old school lynching. And then you got people that want to make a golden statue of this guy. I mean, this is one of the most remarkable trading stocks that there is, but we'll watch it. Again, this week, all of these stocks I mentioned, I don't have a clear direction on them. I don't have a crystal ball. I'm going to try to sit here and say I got 100% conviction in up or down right now. I mean, it's just, I'm a day trader. I look at the day and I go with it. But most importantly, I think regardless of what stock that you trade, it all comes down to right now, because the SPY is at such a pivotal level. You have got to be paying attention to technically this 200 moving average. If we lose this thing, man, it's probably going back here. You got to be careful with your longs at that point. You got to think we go right down into 252 before we find a nice solid bottom. Now, if this proves early in the week again to hold, and maybe it retests it and holds and then starts violently bouncing off of that, then maybe this is a short-term low. That's what we've got to consider. This is either going to become the short-term low or we're going back to here, simply put. And of course, if we do bounce, I'd look back, like I said, 270 to get back into some of these other moving averages. So anyway, if you need help with your trading, this stuff is driving you bonkers, then visit thelincolnlist.com. Take a trial to our live trade room. As always, thanks for watching this version of Weekly Stock Market Mutterings. Trade well until next week. Talk to you.